applying for too much credit at once. Now, a lot of times people have to understand something. You can't go from rebuilding your credit to, let's say, credit card stacking, okay? Because your score is not high enough to start doing things like that. So you really have to establish that base. So this is a common problem when people are trying to add too many accounts to improve their credit score too fast. And then what ends up happening is they forget about one factor, and that is Hello everyone, today we're going to talk to you all about common mistakes to avoid when you're rebuilding your credit. Let's get started. So during today's video, we'll go over what those pitfalls are while rebuilding your credit. And then of course, you got to understand that rebuilding your credit is going to take time. It doesn't happen overnight, okay? So just like when you were improving your credit score at one point, it wasn't something that you could do on Monday and then see the results on Tuesday, okay? It's going to take some time, especially if you're rebuilding your credit, because that means you have some negative items on your credit, and you also may have some habits that are slowing you down from increasing your score overall, okay? And then also, we're going to show you all not just how to avoid those mistakes, but this will also help you ensure that your efforts are successful, okay? So let's go ahead and get right into it so you guys can understand the rebuilding process, okay? And then that way you can make informed decisions that's going to strengthen your credit worthiness, all right? By the way, we get a lot of people that ask us if we can help them improve their credit scores. We most definitely can, okay? Whether you're looking to increase your credit score, qualify for home ownership, lower your monthly car payment. Listen, we can help you. We can make a custom game plan for you after looking at your credit report, just like we help these people that you're looking at right there on your screen. All right. So now, first, you got to understand how the credit scores and reports actually work. Okay. So credit scores, as we know, is a numerical representation of your credit worthiness, okay? We know that our scores are anywhere between 300 to 850, all right? Now, lenders use credit scores to assess the risk of lending you money, okay? Now, with credit scores, many of you all have access to Credit Karma. You may look at My FICO. Just do understand this. Doesn't matter what platform it is or what platform that the creditors are actually using, you need to know where you are, okay? Credit reports detail your borrowing history, and this is going to include loans, credit cards, and of course, your payment behavior or payment history, all right? Regularly monitoring your credit report is going to help identify and address errors if you have any, all right? If you haven't done so already, make sure you guys go ahead and like, share, and subscribe, all right? So now, mistakes to avoid during rebuilding. Number one is going to be missing payments, okay? On-time payments are the single most significant factor in improving your credit score, okay? Number two, maxing out your credit card. Now, high utilization or high credit utilization, and by the way, this is anything above 30% utilization. So what does that mean? That means balance divided by the limit. So for example, if you have a credit card and the limit is 1,000, okay, and your balance is 300, if you take 300 divided by 1,000, you're going to get 30%. That's the most that you should be using on that credit card. Now, that's to really fluctuate the score. If you don't want to see much movement in your score, but you still want to kind of use your credit cards, then you really need to be anywhere between about 5 to 7%. Some people say even a little bit lower, but nothing more than about 7% utilization. Now, how can you do that? Real easy. All you have to do is find a bill that you have every month, something like Apple Music, Hulu, Netflix, Spotify, a gym membership, anything that's under like $50 to $100 or less, okay, depending on the limit. So just look at your credit card, multiply 7% times the limit, and that will give you the most that you can use without fluctuating your score much. And anything above that number, then of course is going to fluctuate your score unless you ask for a credit limit increase, okay? Now, next would be, real quick, if you haven't done so already, be sure to download our free ebook. You can actually scan this QR code, or you can click the link in the description below. Now back to the video. Now, of course, as we just mentioned, utilization is essentially owing a large portion of your credit limit, which of course is going to negatively impact your credit score. All right. Number three is going to be applying for too much credit at once. Now, a lot of times people have to understand something. You can't go from rebuilding your credit to, let's say, credit card stacking, okay? Because your score is not high enough to start doing things like that. So you really have to establish that base. So this is a common problem when people are trying to add too many accounts to improve their credit score too fast. And then what ends up happening is they forget about one factor, and that is the average age of accounts. Okay. The average age of accounts essentially is going to make up about 15 to 10% of what makes your actual credit score. And so you want to make sure that you're not actually, getting too many accounts in a very short period of time, because again, that's going to affect that average age. And if it's too low, then of course that's going to keep your score kind of keep it from improving as best as it can. Okay. Next would be closing positive credit accounts. We see this all the time. Okay. Now, when we say this, we're mainly talking about when people have like a credit card and they say, okay, you know what? I don't want to use this credit card anymore, or I'm bad with this card. I keep overusing it. I keep overspending, things of that sort. That doesn't mean that you should close the account. Again, average age of accounts, not to mention the on-time payment history you get every single month. We need that solid foundation. Okay. So if you are in a position where you're rebuilding your credit, and by the way, rebuilding credit is typically anything that's under 650, under 620, you're rebuilding essentially. And when you're rebuilding, if you need to keep as many accounts open as you possibly can. Okay. Don't just let things go. That's going to make things difficult as we are in the rebuilding stage. Okay. But maintaining a long credit history with responsible accounts can benefit your score. Next would be not monitoring your credit report. Regularly checking your credit report allows you to identify and address errors. Sometimes there's a bill you may not know about. Sometimes there's a bill you may not know about that's not even yours. But if you stay on top of this, or if you have your alerts set up, then you'll most definitely be on top of it. Now let's dive a little bit deeper into each of those. Okay. So as we know, payment history makes up 35% of your credit score. Okay. That's the highest percentage of what's going to actually make up your credit score. Okay. So it's the most critical factor is going to be consistent on-time payments, really just payment history, because obviously it doesn't just count on-time payments. So it's just payment history in together. Okay. But missed or late payments significantly can damage your credit score. Okay. Number two, another crucial aspect, like I mentioned, is your credit utilization ratio. Now, this ratio, as I mentioned, is your balance divided by the limit. But again, the most that you want to use is 30%. But if you really want to be in that sweet spot, then that's going to be about 7% or less. Okay. But you don't want to be at zero. I want to make sure we understand that. Zero means that you're not using your credit card. So like I mentioned, put something small on your credit card, put it on auto pay, you'll be good to go. Now, obviously, the other way around is going to affect your score as well. And that's maxing out your credit cards can negatively impact your credit score. Sometimes we don't even mean to max out the card. And what I mean by that is let's say, for example, it's a credit card that you don't use that often, and the balance is, let's say, $500. It's very common, especially in this current economic climate, that you can have a limit of about $1,500 and a balance of $500. That's actually pretty good utilization. But since it's a credit card that you don't use that often, right now in this economic climate, they've been reducing a lot of credit card limits. And so if they drop that limit down to 1,000 or let's say 500, let's say they drop it down to 1,000. Now you went from 30% utilization to 50% utilization. And even though the bank did that move, it's going to drop your credit score because why? Your utilization. Don't forget, guys, utilization is the second biggest factor, 30% of what makes your credit score. Okay. So let's say, for example, 50% utilization from 30% is a bad look. Or worse, if they drop that limit down to 500, and I've seen even worse numbers than that, where they drop the limit well under the balance. Now it looks like the credit card's not only maxed out, but well over the limit. Here's another problem. They'll charge you an over the limit fee as well. So keep an eye on your credit card limits as you are rebuilding your credit. Okay. When rebuilding your credit, let's dive deeper into this. Avoid applying multiple lines simultaneously. Okay. I kind of touched on that, but each application triggers a credit inquiry. Okay. Now, credit inquiries is not the end of the world. The whole point of having credit, someone has to take a look at it. Inquiries only last 2 years on your credit report. We also have a product in which you can try to get some of those inquiries removed, especially if they were unauthorized as well. Okay. But each application that's a hard pull will be a credit inquiry, which can lower your score temporarily for just a little bit. Okay. While it may be tempting to close old credit accounts once they're paid off, consider keeping them open. Okay. Now, we're not talking about like the auto loan. Don't just stretch that out. If you could pay that off, pay it off, right? So you could pay things off, pay them off so you can just move on with your life. But if you're thinking about closing something on the just for the reason of closing it, don't do that. Okay. There's always a credit card that you can put on auto pay just to kind of just have it and not use it and things of that sort. But if it's an outrageous annual fee or if it's a financial situation, then of course, then it would make sense to do so. Okay. But just know it will affect your score. All right. So now, a long credit history with responsible use, that's a key word, can positively influence your credit score. Okay. And like I said, keep an eye on the report so you can watch out for inaccuracies and things of that sort along the way. So let me know your thoughts inside the comment section below. Let me know what you guys are dealing with out there as you're rebuilding your credit. I know some of this stuff may be basic to some people, but you'd be surprised. A lot of people do not understand it, or it wasn't broken down in a way where they could understand it. Okay. And because they say, well, you know what? I'm rebuilding my credit, but at the same time, I'm hearing I need to get this account. I'm hearing I need to get this account. I heard that I need to get this type of card or whatever. If you get too much of that, you have to be careful, especially not just getting advice from people, but watching things on YouTube and things of that sort, because some people, I'm telling you, most people have good intentions, but they don't know how to break down the information to say or give disclaimers and say, hey, listen, this is good if you are in this situation. You should do this if your score is here. Just because you hear about an account does not mean you need to get that account at this moment in time. Okay. There's a time and place for everything as you are rebuilding your credit. Okay. So make sure you guys understand that. Let me know your thoughts inside the comment section below. All right. Next would be strategies for rebuilding success. Okay. Now that we're working on rebuilding the credit, what else can we do? Well, number one, you can develop a budget and stick to it. Okay. This helps avoid overspending and potential missed payments. Okay. A lot of times people think they have a credit situation when in reality, you have an income situation. You're just not making enough. Okay. Or there's too much money obviously going out and you need to reduce your expenses. So a lot of times just looking at that budget most definitely will highlight some things as well. Number two, start with a secured credit card if okay, you don't want to have, let's say, credit builder loans, which we'll put some links inside the description below for some of you all to take advantage of as well too, especially if your credit score is under 650. If your credit score is under 650, 620, that's most definitely going to benefit you as well. Okay, even with a secure credit card. Now, secure credit card, this is an old, I won't say trick, but this is the old strategy that's been working for years. That's the purpose of having a secure credit card, is to help you rebuild credit, okay? But it will require a security deposit. In most cases, they graduate the card. A lot of banks are doing that now, or they turn that into another card. But in most cases, it's also refundable as well. But it'll be a valuable tool to establish a positive credit history. And you want to do it the same way. You get the credit card and then you put it on a small bill that you pay for every single month. Let's say, again, something that's under $50, under $100, that not only shows usage, right, every single month. So the bank is going to like that, but you don't have to worry about being late because it's already a bill that you have. A lot of times when people get credit cards, they think to themselves, okay, what can I go spend this on? It's like, no, we're not looking to spend this on anything. We're looking to make sure that we're staying the course and that we're paying our bills that we already have. Okay. Next would be considering becoming an authorized user on someone else's account. Okay. But make sure they have good credit habits. Okay. I've seen people become an authorized user on someone's account just because they thought that person had things in place, and it ended up dropping their score. And they were actually going into homeownership. So when they were trying to get closer to a pre-approval, they actually end up being further back and they had to wait another 45 days for us to get those points that they lost. So make sure that the utilization is under, at minimum under 30% at the most. Otherwise, being added to that card may not only drop your score, it may not move at all. So just keep that in mind as well. But being added to a trusted friend or family member credit card is going to be, and of course they're using it responsibly, can benefit your score and even for the long run as well. But again, keep an eye on that because sometimes around holidays, birthdays, anniversaries, summer times, things of that sort, people, it's their card. They can use it. But as they use that card, the balance gets closer to the limit and that can affect your score. Okay. Next would be paying down existing debts. Now, just because you are rebuilding your credit, it may be a charge off. It may be an old collection. That accelerates the process. So a lot of times people put that off. They say, oh, I got this $150 bill. Yeah, but that $150 bill, collection, charge off, whatever, is costing you points. So if you're watching this video right now and you're trying to figure out ways to improve your score, look at what charge offs you have. What can you afford to settle? What collection can you afford to settle? What can you do for pay for delete, pay for removal, right? So there are ways that you can actually do this. Listen, it doesn't make sense to me how people will pay thousands of dollars for some type of credit repair and they have less than thousands of dollars in debt. Just use that money to pay these people off. And so don't just use that money to get things removed. Trust me, you would get a much better result. Think about it. If you get something removed, that doesn't mean that you've changed as a person, and not in a bad way, because we got to change habits, things of that sort. But watch where I'm going. So think about it like this. If you pay the bank that you owe, you rebuild that relationship versus just getting something removed. That just means it's not on your credit report, but it's still in their database. A lot of people think that if it's not on their credit report, they don't owe the money. We talked about that in another video. So make sure that you're on top of that, because every state has a certain amount of time that they can take you to court regardless of it being on your credit report. All right. So, but either way, thank you guys for watching. Make sure you guys like, share, subscribe, and we'll see you on the next video.